much for joining us today. Um, for people who don't know what Pivot does, basically we are a career tech platform that helps people transition into new roles and fields with the help of industry experts and end-to-end entire transition planning and discovery of the best tools that are available for your achievement of career goals. So today's topic obviously has to do with the world of finance, and this is actually slightly different than what we have covered in some of our prior sessions, because typically, we have seen a lot of traction on our platform, a lot of users trying to pivot into tech-related fields, right? So it could be like product management, UX, UI design, etc. But one thing that we have been noticing as well, in addition to technology, there are a lot of people who make career moves within the finance industry. What that means is these may not necessarily be people who are transitioning from outside finance, but they have, let's say, started their career in finance, let's say at a retail bank or, in a corporate finance of, certain company. And they're thinking about other subsectors within finance. And the greatest demand that we have seen is for roles within investment banking and venture capital. These two are clearly the most premium finance fields, I would say. So today's session will focus on, what are some of the key things that employers are looking for and that job seekers can do to land a role in this field. So yeah, with that as background, I just want to also give Abhishek, you and Swarandeep a chance to share a bit about your background, your career journey within finance and how you landed in your current role, perhaps.
Sure. Should I go first, Varun?
Sure, you can go ahead first.
Okay, thank you. I'm very happy to be here. And thank you, Arjun, for the opportunity. So yeah, I'm Abhishek. I'm a VP in Morgan Stanley. I'm based in London. I've moved around a fair bit, I think, both within, in terms of jobs and also in terms of location. So after I studied engineering, and then my first job was as a quant trader, and then I worked for Credit Suisse in the risk management department, so which was a very quant heavy sort of role. And then I went to IIM, and after I graduated from there, I've been more on the private side, which is less quant and more sort of strategy. And so I've seen both sides of banking in that sense. So I spent 7 years at Credit Suisse, and then for the last year, I've been with Morgan Stanley. Based, and in between, I also moved from Bombay to Dubai and also to London for the last 3 or 4 years.
Got it. Awesome. That's helpful. Swarandeep, maybe you can share a bit about your background. I know you have also had, kind of diverse career journeys. So it'd be great to hear what kind of roles you've been in.
Sure. Thank you. Thanks for having me and giving this opportunity. So my academic background is also engineering. I'm a computer engineer from NSIT Delhi University. I started my first role, which was a mix of, I would say, tech and finance, more as a financial software engineer or financial tech in Sapient Global Markets, working for their largest iBanking client called UBS. Which was a very, very good flavor of what financial services is all about from somebody who had just graduated. But after I spent a year, I wanted to move into slightly more hardcore financial role, which I started with BlackRock. And within BlackRock, it was financial markets advisory, which was a mix of, I would say, finance and consulting, but consulting very, very specific on the, like BlackRock had a very good hands-on asset disposition and wind down. So specifically coming from the crisis of 2008, both in US and EMEA markets. So I spent 3 years there, and then I moved over to private markets in venture capital with a Spanish group company called Exxon Partners, managing their India dedicated venture capital fund. So that was a completely different kind of a skill set, different kind of a role. And within that also did both direct and indirect investments. So direct would mean investment directly from a fund into startups, and indirect would mean investment from a fund into other venture capital funds, which would further invest in startups. And last 3 or 4 odd years, I've been more on the intersection of, I would say, finance / investing and sustainability. So you can term it sustainable finance or more around impact investing. So last 4 years, I've been largely doing that. And since about a year, I started my own venture capital fund / a micro VC fund called Lykke Capital, which does a smaller scale, like about 100K kind of investment into Indian startups. So I'm kind of back into my like last role into venture capital. So I now do investments from my investment syndicate micro VC fund into Indian startups.
Got it. Super. So, the first topic that I want to dive into is just really getting a broad understanding of these two fields, right? Even though, when I was first, I think I was speaking with Swaran, you at one point where you were like, okay, we are doing this workshop, but finance is a very vast field. There are a lot of different career options in the field. So what do you really want to talk about, right? And I think it's a very pertinent question, because even if we are focusing on VC and investment banking, these are very specific subsectors of finance. But even within these subsectors, there are a lot of different career options, as far as I see from a high level view, right? And there are obviously very specific career trajectories that people can expect in these fields. So maybe we can just start by talking about the kind of roles in terms of not just seniority level, which most people understand like analyst, associate, etc., but also different nature of responsibilities that exist within a typical venture capital firm.
Sure. So I think within the spectrum of venture capital, of course, there could be two different subsets, I would say. So venture capital, one would mean equity round, which is, I think, majority of the case, like 95% of the funds, 95% of the financing is happening on the like equity side from a fund perspective. But then last 5 odd years, there have been like a few debt funds as well, like venture debt funds. So they would eventually invest along with equity rounds into startups. But there are like handful of such funds. They need to have they need to see very stable cash flows into companies that they're investing. They typically don't come into isolation. So that would mean they would not invest singly. They would participate only if an equity round is happening. So like from a very, very broad perspective, I would say these are the two major classes. But then, of course, there could be other, you can call it venture capital, you can call it private equity, but then like infrastructure investing, real estate investing, ESG / impact investing. So these are broader, they have a lot of overlap between each other, like principal skill set that you do is at the end of the day investing, but you could have some specific flavors. Similarly, I think credit investing as well, where there are very specific funds which are doing doing structured credit. So they would typically create a structure on how credit can be given to a company or to an organization. Similarly, there are some other event-based funds which would invest in a company if, say, a distress situation is there or a bankruptcy is filing. I think that's more from a very high-level perspective. But within a fund as well, there are two kind of major or three major subsets, I would say. One is somebody who is actually investing. So you can call it an investment professional whose main job is to, one, look for newer opportunities. And the second is that once they have already invested into a company, how do you do the portfolio management part or asset management part of those portfolio companies? The second, I would say, is a lot of support functions. So you have like HR, you have people who help you on the CS and or the legal, like company secretary, legal side. So those are like non-investing roles, mostly on the support side. Then there are people who you typically called operators, largely relevant for private equity funds. But then depending on how big a VC fund is, there are a few funds that have already started hiring operators as well. Their job is very, very specific. So for example, in my friend's case, he looks at portfolio value creation, which would mean a fund has already invested into the company, but how do you realize the value from, say, like an EBITDA perspective? How can you maximize their EBITDA? How can you like play on this equity, debt capital structure and things like that? So they would try to maximize the whole value of the portfolio company. So they're typically called a portfolio value creation specialist, or in some cases like as a like wind down, like restructuring professional. Company that they have acquired is into a bad situation, they want to turn it around. How would they turn it around? So that is still a very non-investing role, but has a very strong execution, operation, skill set or capabilities associated with it. So I think that would be typical structurally on investing versus non-investing. And from a I think sectoral or kind of fund, like the ones that I mentioned earlier, like real estate, infrastructure, ESG, impact investing, and so on.
Yeah, that's a very comprehensive answer, and I like it because it gives you a broad overview of what all exists within what we might think of VC as a smaller world, right? And the reason I liked your answer because you laid it out both from an industry diversity standpoint, so the kind of different firms that might exist from a debt focus or an equity focus or something else. I mean, for example, I know there are firms now that are using revenue to invest in new firms, right? And so that's not equity or debt necessarily. And you also broke it down in terms of the different roles that exist. And one thing that, just a follow-up question here, and it's a quick one. In your experience, do you feel like people can kind of balance having different roles? Or, for example, let's say I'm a VC partner. Can I be a VC partner at an equity firm as well as a debt firm? Or usually I have to specialize in one and focus on one? And same goes for the nature of roles that you described, right? Like as an investment professional and operator.
Sure. So I think it's difficult at the senior stage to have your hands in both. Typically at the junior level, there are folks who start at the venture debt, but then eventually move into equity investing or vice versa. But as you start becoming more senior, I think you have to specialize because your deal flow or basically investment opportunities that you are scouting would entirely depend on that, whether you are doing a debt deal or a equity deal. So I think initially analyst associate is fine, but then as you start becoming either a AVP, VP or a principal, you have to pick one area, whether it is equity or debt, or you actually maybe working at a debt fund and decide to start your own equity fund. But then it is slightly more on you as an entrepreneur or as a fund manager to kind of change it. Very rarely you will find somebody who has been in the equity side. Having said that, I think there are few people who believe more in the skill set, which is like ultimately developing a deal flow, being able to analyze whether this is the right opportunity for the fund or not, and then like in a way syndicating, finding other relevant investors. But more often than not, I've seen equity folks not hiring debt and debt folks not hiring equity folks as you go senior level.
So there's a certain level of specialization that sets in after a certain point. Got it.
Correct. And same for I think the kind, and same for the kind of role as well. I think somebody who is a specialist in identifying and investing is different from somebody who is operating that company, because his or her concern is making sure execution happens, operations happen in the best possible manner or not. But the investments professional focus is just to invest in those opportunities, and then whatever little support they can provide. But the operating folks are like very, very differently focused. So it's very rare you find a good mix of somebody who is having both skill sets.
Got it. Okay, that's very helpful. I think we may switch focus a little bit towards investment banking now. So Abhishek, thanks for waiting there. I know we kind of dove a little deeper in VC.
I found it fascinating.
It is fascinating. There's just so much to uncover and unpack there. But I think, investment banking is equally fascinating, especially to people who are, from outside of investment banking field, even if they are, financier by professional. Can you still hear me? One second.
I think we lost
just give me one.
about
just give me 1 second. So Abhishek, maybe we can just start by talking about the different kind of roles that exist within investment banking, similar to how Swaran had kind of dove deep into VC. And then there's so many different kinds of sub-industries within investment banking, and then the different kind of roles that exist. So maybe we can cover it from both of those angles.
Yeah, sure. Happy to. So I think, primarily, when you say investment banking, in terms of revenue, there's primarily global markets and there's everything else. So basically, what we call IBD. So global markets would be everything on the public side, and IBD would be everything on the private side. So by public side, what I mean is stocks, bonds, futures, options, all of that. So someone on the global market side would primarily be helping clients, someone like Swaran or like any of the asset management firms or like even corporates deal with stocks, bonds, hedging, all of that. And sometimes earlier they used to even take their own positions, do their own trading as well, but banks are doing increasingly less of that. So all of that happens on the global market side. But because you're dealing constantly with so many securities and everything, that creates a different set of roles in terms of structuring, risk management, like a lot of the quant teams. So that was my first role in banking, was with Credit Suisse on the quant side. So all of that is on the global market side. And then there's the private side, which is where I am now, which is IBD, where we primarily look at like more big picture sort of activity. Mergers and acquisitions is what I focus on for the most part. So that's self-explanatory. Companies looking to acquire other companies, private equity houses looking to acquire companies, and so on. And then there's a bit of a gray area, which is IPOs and bond issuances. It's sort of, you're helping private companies get on the public side. So that would also come under my remit. So that would also be IBD. And also, like, to some extent, we might get some help from someone on the public side. But otherwise, it's under IBD as well. And then there's the other gray area is equity research, because they do research into public stocks, public bonds, and so on, but they're also not actively taking positions. So there's like a sort of a Chinese wall between them and the global markets team. So they sort of technically sometimes sit within IBD, or sometimes they're a completely different division altogether. But primarily, I think this is, and just given in terms of the roles themselves, like as I mentioned earlier, like I think on the market side, it would be a lot more quant risk management. That's the sort of flavor of the roles you'll be getting. So it's a lot more mathematical. On the IBD side, it's a lot more maybe analytical. It's more, it's a lot of accounts crunching, liaising with clients, understanding strategy. Almost like a lot of, it's not as much as consulting, but there is some element of, there is a
advisory.
That exactly. It's an advisory role, whereas like equity research is like it's research. It's again, it's very similar in terms of work. It's very similar to what we do in IBD, but it's all research. It's the ultimate end product is a report, versus like for us, it's giving clients advice.
Got it. So again, just a follow-up question there, right? So there are obviously different nuances, services, and subsectors within the world of investment banking, which you just described. For example, there is, your typical M&A and IPO related deals. Then you have your bond issuances, you have your equity research, and a couple of other things. Now, as somebody who's just starting out in finance or trying to break into finance, is there a way to kind of understand for yourself, like which of these 3-4 different areas might be relevant for you? And also, like, do you specialize in one area when you are starting out, or is there capacity to kind of juggle different things within IB?
Yeah, sure. I think primarily, I mean, so I'll answer the second question first. I think internal mobility at most banks is phenomenal. Within Credit Suisse, I think I moved 3 teams in 7 years. Like most people I know, like usually jump a few times. So you can specialize as you get more senior. I think it's similar to what Swaran said. You specialize as you get more senior, but when you're starting out, like they encourage you to try as many different things as possible. Like a part of me actually, like I went to, I was at CS in quant, and then I went to IM and came back. But like a lot of my friends had done the move internally already. So I was like, okay, did I need that master's degree? So it's quite flexible in that sense that they encourage you to move around internally. you don't need to specialize. But sorry, your first question was I'm forgetting now.
Yeah, I think it was. Go ahead.
How to figure out which one to where you fit in within that. So I think, I mean, that's the process I went through as well. So I think in terms of broad overall skill sets, I think if you're interested in what draws you to finance, if it's sort of macroeconomic events, if you like following where the markets are, if you're, I mean, to be honest, like all of us follow where the markets are, but like on a day, like on an hourly basis, if you constantly like tracking markets and seeing where they are, and if you, that's probably like global markets is probably the place. Again, like if you're heavily into calculus and just creating like option-based strategies and coming up with option pricing models and that sort of thing, that's also like, again, all of that is global markets. If you like dealing with company strategy, if you like dealing with the bigger picture of how companies can expand into new markets, or what an acquisition target could be, and what sort of target, like what can HUL acquire to give them like more synergies or something like that. Like, I mean, that sort of like bigger picture. If you like answering those questions, then probably IBD is the place for you. And again, if you're sort of like, I know people who like stocks, but also don't want that sort of like constantly taking positions. Like if you like sort of looking at stocks, but like in a very analytical to a great degree of depth, then probably equity research is a good place to look at.
Okay, it's a very nifty framework, I think, that you described. And I think every person would probably have to go through their own journey to understand what's best for them. Like you yourself said, there is great internal mobility and you can try out different things, figure it out after a point in time, rather than, just guessing what would be best for you and staying stuck in that for a longer period. So that's very helpful to understand that there is this kind of flexibility and internal mobility within the firm. So the next topic
exactly.
is...
Just
go ahead.
quickly to round out, I mean, the other things, I mean, I think even that applies even to sort of middle office, because my first role was in sort of a middle office sort of role to the front office. I mean, it's harder, but like if you can prove yourself, like firms do encourage that. So I think there is some degree of like, especially in India, I think there's like, oh, I can't be doing X, Y, or Z. Like it's not, again, not the sexiest part of investment banking, but I think just given that if you can go in and prove yourself, like I think that definitely is one. I mean, there's only like realistically, there's like two broad ways to get into these roles. One of them is internally, or the other one is through like the whole campus recruitment process, or like then you go through headhunters and all of that. And I think within that, like statistically, the best way is probably just the internal route, in my opinion, at least.
Okay. Yeah, so the next thing that I want to talk about, and it's kind of related to a lot of the things you have already shared, which is, what kind of roles are typically existent at VC and investment banking firms, is the kind of skills that people or these employers are looking for today in these fields, right? I think for most people who are in college aspiring for a finance role, or even trying to transition from a different industry, it's pretty evident that you need to have good financial acumen, which may mean different things depending on the industry that you are in. Also means, good with numbers and having great analytical skills. These are some of the basics I think most of the people would understand, right? I'm really trying to now focus on things that will help people stand out, from early in their careers when they are starting in, let's say, venture capital, Swarandeep. So if I am an analyst or an associate with less than 5-7 years of experience, what are some of the things that I can do to really stand out from the crowd and really get my foot in the door of one of these VC firms?
Sure. Happy to answer that. So I think like if you break down any investment professional in a VC fund, they are, irrespective of what designation they are, they're essentially looking to find companies. And to find companies, if you go a little back, they're ultimately understanding country, and within countries, which sectors are dominating, why is the macro like factors relevant for that particular sector or industry. Why would that particular macro help and not help, or those kind of analysis they are doing. And within a sector, like there could be different business models. Something could be asset light, something could be asset heavy. There could be different approaches to the same pain problem that company is solving. So ultimately, that is the core skill set, which is not tangibly defined as only one skill set, but it's a mix of having a macro level understanding of the country, of the sector, subsector, or business models, then having a view on which teams or why are they the best team to kind of crack executing a particular business problem. So essentially, that is the skill set, and how you can kind of showcase it to an employer if you don't already belong to that sector. So I think there are two broad areas. So one is a lot of people who are on the consulting side. They do this kind of for a living. Like they would typically be helping their clients on understanding, okay, is this a right market to enter? If it is the right market to enter, what are the different ways on how they can enter? What is the say concentration in that industry? Is it a very concentrated industry? Is a very largely used industry? So they have a lot of skill set from that. So if somebody is looking to kind of enter VC on a long-term basis, consulting could be one skill set, or consulting could be one job on how they can enter. The second is definitely on the entrepreneur or the founder side, that if you are like building a company, you have been on the early stages. It could be a 0 to 1 stage, it could be 1 to 10, or it could be 10 to 100. So different funds and different levels at which they hire, they are looking for specific skill sets among one of these. So when you are building those companies, you try to understand, okay, what is approach should I do? How do I achieve a go-to-market strategy? How do I achieve a product market fit? Which becomes relevant when you are analyzing those companies for investment. So a lot of people actually come from the other side of the industry, which is founder / operator at tech companies or startups, and then they basically work there for a while, get a very good understanding on how companies scale, on how companies are built, how teams are formed, how do you do all this GTMs, PMMs, and so on. So that is the second stage. But for somebody who is even a little like behind on that, what they typically do, you act is as if you were a VC. So that could happen in multiple ways. One, you could choose your angel capital or your own proprietary capital and start deploying in companies, which could be a very, very excellent way to kind of do exactly what you would do when you would join a VC fund, like deploy your own capital. And that could come because okay, you have been in a fintech startup that is doing phenomenally well. A lot of founders that are starting, they would want to take your capital so that they can pick your brain, do brainstorming, do all those kind of things with you. That is one way. The second way is, which is where you're not actively deploying capital, because angel capital is not, of course, somebody like everybody's comfortable. It's a very high risk, high return kind of a capital. Not everybody has that kind of understanding as well. So you can play what is called like a fake VC. What I mean by a fake VC, that imagine you were in a VC fund, and how would you actually go about analyzing a company, analyzing a sector, building a case or an investment thesis on that, and start developing those and sharing it publicly, whether it's on your blog, whether it's on your Medium, whether it's on your Twitter, whether on LinkedIn, and start sharing it with the world publicly and receive feedback on that. I think once people start seeing that you are naturally good at it, or you are over a period of time getting good at it, you would start receiving calls from VC funds that we really liked on how you have analyzed this particular company, this sector, and we have a role for somebody like you. And I think that is a way to kind of what is typically called increasing your luck surface area. So you put yourself out in the public, share what is relevant for your role, and get inbound interest from funds to for you to join them and help them do a lot of these things that they normally do. So I think that is, in my opinion, two best ways. One is actually deploying capital, but if that's not possible, that's a constraint. Actually doing a fake, imagine you were at a VC fund and doing the same thing. It's just that instead of actually at a fund, you are doing something else, but your passion, your additional time that you're doing, you're spending on this. So I think a very good example is this, a junior VC. Even before I think that person was in venture capital at Venture Highway, he was already doing a lot of those things, which of course, once he joined, having a lot of those theses, he or she and his team was able to skill that. but that is a very like a good way.
So just one thing, Swaran, for people who don't know, just one thing, for people who don't know, a junior VC is a venture capital firm now, but it's actually a moniker for somebody. I'm forgetting his name, but he's a very active LinkedIn user. Aviral, correct, Aviral. He's a very active LinkedIn user, and he has been putting out his thoughts on the VC world in terms of different investment theses, macro trends, and different analyses that he has done in his role as a VC, and has been putting it out on LinkedIn, and it gets immense traction. And he's been able to make a mark for himself both within the VC community and also as just a content creator on LinkedIn in both ways. So I just wanted to give that background, but please continue.
Sure. I think, and similar is FinShots. I think FinShots has been doing something very, very similar or on a very professional scale. I think morning context and things like that. If somebody is able to like even achieve like 1/10 of what they are doing, to be able to crack a role in VC, I think that is good enough so that you can have a very meaningful and an active discussion as you are introing with a fund. So I think that is there. Another role, which is more like, you can call it a side hustle, you can call it a part-time role, is something called VC Scout. So VC Scouts are typically people who are an extension of the investment team. They're not full-time people. They're helping VC funds identify opportunities, or in some cases also develop or deploy capital on their behalf. So depending on your seniority, how much value add they see, they either just give you a mandate to help them find more companies that were typically not in their network or in their portfolio. Second could be deploying capital. And third, which is the most light touch form of Scout, is mostly like an education awareness or what goes behind a VC firm. Like it is kind of still a very big black box. So they try to kind of share on how they think about a particular company, about a particular team that they're for people who are wanting to trying to understand what goes behind a VC, the normal day-to-day job. They can take a flavor of it from a Scout role. There are not many in India, but if you are able to even like find out those one or two, or even if you're an unofficial Scout, which means that you are in a role where you see a lot of companies, say you may be at Angel List, you may be at Let's Venture, you naturally see a lot of startups. For you to refer to them, and if that keeps on happening repeatedly and they end up investing in such companies, they might ask you to kind of join them full-time as well. So you have become an unofficial Scout and later join them as a full-time professional.
Yeah, that's very interesting. Just in the interest of time, I do want to quickly move on to investment banking and kind of discuss the kind of in-demand skills, Abhishek, that you are seeing. I know investment banking has been a popular like a finance career option for about, I think, 4 decades at this point, at least globally. In India, it might be slightly more nascent. So there are certain things, again, people understand at a basic level are just a threshold requirement from a skill standpoint, right? Financial acumen and all these things. But what are you seeing in terms of the new trends that are coming in a lot more handy in the kind of deals work that happens at investment banks today?
Yeah, sure. I mean, I think it again, the dynamic global markets versus equity research versus IBD, it just varies significantly. But I mean, I think just the one overarching comment I would make is just, I think similar to what Swaran said, like just showing that extra, I mean, when you're not from a financial background, like just demonstrating that you can do this and you have done this and you have a genuine interest in this. And how that can be done. For example, in IBD, we had one applicant who had sort of got really into the depths of like 5 or 6 M&A transactions. And a lot of this is like public info, right? So it's you can read the numbers, look at what the company had announced in terms of synergies, why they think the acquisition made sense and that sort of thing. So he'd done this for like a number of different announcements of announced mergers and acquisitions, and really analyze them and try to understand how the valuation would have been performed. Did they overpay? Did they underpay? What instead of getting acquired, if the company had gone in for an IPO, would that have been for the shareholders who are exiting the target company? Would that have been better? Like that was one thing. It was very impressive the way it was done. And I think it just goes to show that, just shows the sort of demonstrate that you can do the job, and also like you have a genuine interest in this field, and you're not just looking for a change and applying for a bunch of things. That is on the IBD side. Equity research, I would imagine, would be something like focused really on on one stock, or on a few stocks, and like really build a model bottom up, and see and form opinions on like, is this company undervalued, overvalued, what you think the fundamental share price would be. And actually, if you do it a couple of times, like you become better at it as well. So it's I think it's just showing that sort of incentive. And I think on the global market side, ultimately, I think it's ideally like if you can have a stock portfolio and sort of start investing, you'll start picking up skills that you don't even realize, because just every day is a journey in the markets, right? So it's I think that's in the global market side, to gain a solid understanding. I think that would be the ideal way. I mean, if that's challenging, I think you could do something similar to like just sort of coming up with market strategies, even if it's paper money, just see if your calls are right or wrong, and so on.
Okay. That's helpful. So again, what I like about both your answers is you give very practical insights into not just the abstract skills. Like you could have easily said that you need certain analytical skills, or understanding of the macro environment. But I think you really dove deep in terms of identifying the transition path for somebody who's not from the field, or is just starting out in their career, and how they can actually showcase to a potential employer in a very tangible, practical way what things they can do to break into that role. Just before we move on, one thing I want to just share with the audience is we are going to be taking all of your questions for Abhishek and Swarandeep. So please share them in the chat section here. We already have a couple of questions directed to both of you, actually. The first one that we have is somebody saying, I would like to know if someone working in a credit rating agency as a mix of analyst and operational side role is considering a move into IB or VC. What are some of the key steps I can take to move into these roles? I think Abhishek, Swaran, you both have touched upon a lot of the things already. Is there anything you would like to specifically add to what you have already shared, which is more tailored to the fact that this person is from a credit rating agency background and has both analyst and operational experience?
Yeah, I mean, I think if you are at a credit rating agency, I would imagine like a lot of like in terms of like the financial skill sets, you should have a good handle on that already. So I think what I would focus on is just doing the more equity focused like modeling, demonstrating that through your content, and just like I think ultimately it's a lot of LinkedIn networking. I think helps, of course, but then it's a combination of that and also demonstrating that you've done a lot of equity modeling. You've sort of looked at, say, whatever 10 stocks and this is my opinion on this one is undervalued, this one is overvalued. The reasons I believe the growth trajectory is X, and so on. Because like credit, I feel, is generally seen as a lot more like downside protection, whereas like a lot of what happens in IBD is what is the upside, what is the path forward, and that sort of thing. So just demonstrating that you can think along those lines as well, and that you have a genuine interest by showing that you've sort of done this work on the side.
Okay.
Yeah. So I think just to add to that, I think if the person is from credit rating agency side or the credit side, I think what could also be relevant is that this venture debt funds or debt funds in general have a lot more emphasis on those kind of skill set versus equity. So if it's an equity, it's a transition to equity role, of course, a lot of this what Abhishek has mentioned would become relevant. Like, can you do that equity modeling? Can you think on the high level? But if from a relevance perspective, I think credit rating, credit funds, debt funds, they are more aligned to that kind of a skill set than an equity fund. So looking at not just from a VC or a equity fund, but also looking at like credit funds, debt funds, venture debt, those kind of skill set, because then it becomes very, very relevant to that kind of a skill set.
Okay. Yeah, I think very helpful. The next question that people have, a lot of people have in fact asked us, and I'm sure you guys get these questions all the time, is MBA basically. That's for a lot of people in their early to mid 20s, a key question or a bridge that they have to cross. To MBA or not to MBA. And Abhishek, I know you were talking about this. You alluded to your master's experience from IIM earlier. So, but I want to not just hear from from a student perspective as to like, so you have to go through 2 years of that learning journey again. So you have to drop out of workforce, but also from your experience as your professionals in the field, whether employers actually require MBA for associate roles in the beginning. And in case not, then what are some of the other ways that people can gain the same kind of experience and knowledge that one would in a business school, and apply that in the work? Suran, you want to take this up first?
Sure. So I think like a lot of it also depends on the sector or subsector of finance. In some areas, specifically, I think venture capital, it becomes a lot much important or relevant because I think there is definitely a very increasing tendency to hire people who have been at top colleges, whether it's in India or abroad. Of course, there is a very strong preference for that, but that has increasingly been substituted by other skills or other things that people have done. So somebody who has really dug deep into, say, like a SaaS sector for a SaaS fund or a fund that does SaaS investments, to kind of hire or employ them. That has started becoming a lot more common than it was like 5 or 10 years back. And that has to do with the maturity of the VC or the startup ecosystem as well. But if you talk more specifically about the VC, in some sense it becomes relevant, or you figure out your own path. For example, in my case, I was clear that I am not very interested after my first stint in VC to join another VC fund eventually. I was more interested in developing something of my own. So it kind of became less relevant, or it kind of became in the shadow that I want to do an MBA just for the sake that I would want to go into a VC fund. So kind of I substituted my own learning, my own initiative to start something in case they have a very strong preference and they would not hire me, for example. So I think there are ways on how you can counter that, but then I think for everyone, and after I think Abhishek can maybe add to that. I think for an MBA, everyone has a very, very different objective. Somebody wants to just network. Somebody wants to just get a brand name out there. Somebody is looking to transition to a field which otherwise is either very difficult or not very common. For example, breaking into consulting on a lateral level becomes very, very hard. So I think different people have very, very different objectives. There is no one size fits all for any MBA program. And I would say mostly from a global MBA perspective. I think India, there is a uniformity in some sense, like people go into in the first 3 years or first 2 years. So there is like a very uniform kind of a bit, but as you do MBA at a slightly more senior, we have 4 years, 6 years, 8 years experience. Everyone comes to a very, very specific objective on why they want to do that, and why is that important. Why is MBA an important part of that entire journey on how or why it will help them. I think as long as the answers are clear and there is no other way on how you can bridge that gap, whether it's a skill set gap, whether it's employer perception gap, or whether it's a geographical change gap. Yeah, I think then if somebody wants to do it, I think by all means. But more often than not, it's the easier path to do and then get your foot in the door, versus like hustling and trying to convince someone on you have those same skill sets and those kind of things. But yeah, it requires more effort, more persistence, more networking, but you can still achieve the same goal using other means as well.
Yeah, I like that. I think in some ways, Swaran, I know you didn't say it, but I was reading between the lines and it felt like you said something along the lines of MBA should be your last resort if you don't have other ways to kind of achieve your end goal, whatever that is. Then definitely MBA should be a considerable option out there. So Abhishek, what are your thoughts about this?
No, I think broadly similar. I mean, it is credentializing, right? So there's many ways to go about credentializing. You can in finance, I don't know, get a CFA or demonstrate all the other things that we've said. Like back in the day, like when I started out, like literally the only two ways you could credentialize was MBA or CFA, and those are the only two options you saw in front of you. Whereas like now, I just feel like it's the options are a lot more diverse, which doesn't mean you shouldn't do it, because it still opens up a lot of doors, and it's definitely if you are transitioning and if the transition is quite, someone who's worked for a long time in a certain like completely non-financial industry and wants to break into finance, it might be the only practical way to go about it. But I mean, there are other ways to credentialize. I think back in the day, there was like maybe 10, 15 years ago, there were like especially in banking, there were roles that were almost only for MBA. So even people who were working would take a couple of years off, do an MBA and come back to the same bank. That doesn't happen. I know zero roles that are like MBAs only or that sort of thing. It's if you're good enough, if you have the skills for the job, you get the job. It's not like a prerequisite in that sense anymore. Certain parts of equity research, maybe CFA is a prerequisite, but like MBA, I don't think is in that sense. But having said that, I mean, it's a useful set of skills. Can you get those skills directly? Sure. Like, I mean, networking, it helps. Again, there are benefits to it, but again, there is an opportunity cost as well. So, I mean, there's no, I think each person has to like evaluate that on their own terms, I think. So
it's basically no one size fit all. You kind of have to understand. Yeah. Similar to what Swaran was saying, you have to really understand what your end goal are, and exactly. Where you currently stand, assess the gap, and then see if there are other ways to bridge that gap before you finalize doing an MBA. But I like the answers again, because honestly, it's kind of a contrarian point of view. I feel like if you look at a lot of the job descriptions, JDs out there, right, today for certain finance roles, I mean, we look at these kind of JDs all the time in our work. And I would say almost 7, 8 out of 10 times they do say MBA required or MBA is a big plus. And I don't know always how to advise our users in terms of whether they should really pay heed to that and not apply to the role if they don't have an MBA, or they should take it with a pinch of salt. And if they feel they're a good fit, they have acquired the same skills outside of their MBA experience, to go ahead for it, and things might still work out. So that's one of the conundrums that we see from a practical standpoint when people are job searching. Any thoughts on that? Like when people are actually applying for roles that require an MBA, or say MBAs are good to have?
I mean, if there are, I mean, it's never. I mean, in my head, like, I mean, maybe the difference it makes between if you find a candidate with like really good skills versus like one has an MBA, one hasn't, maybe in terms of seniority might make a distinction. But like in terms of the hiring decision, if someone has all the right skills for the job, is a good fit, in general, like we have gone ahead and hired the person. It's not okay. When I know they put up this MBA required, I think it's more like a filtering mechanism that then that companies like to put in. I mean, if you can show other credentials to sort of balance that out, I think it's generally, in my experience, it's been you can ignore that and apply for that job anyway. If you can prove that.
Mm-hmm. Okay. All right. Swaran, any quick thoughts on that? Otherwise, we have another few questions that I can ask.
I think maybe another way to also do like this informational interview / LinkedIn searches, that has anybody at that firm specifically been able to do that earlier. That can give you a good sense check if they're open to that or not, or this is a very, very hard criteria. I have seen this not being a hard criteria at most of the places. It is just like a good to have, or like if somebody has it, they would kind of value that. But most roles are not, for most roles, it's not a deal breaker that if you don't have it, they would not even consider you, or they would not even interview you.
Got it. And Swaran, just one quick question, because we just got it here, is for IB and VC roles, I mean, especially for you VC roles, is there any priority or preference given to people who may have a master's degree, maybe not MBA degree, but another master's degree, like master's in finance or something else, which is helpful?
I think for VC, I don't think so. I think in general, masters other than MBA in India is like typically not valued, even if you're doing it from outside. I think recruiters don't have that perception that masters is adding any specific any specific value per se. I think MBA still has a lot of value in terms of recruiter mindset, recruiter perception, but other degrees not so much for a VC role. I think for other masters, for other financial roles like say markets and others, yeah, they sometimes value that, but in general, I have not seen much value being given by recruiters hiring managers for other master's degrees.
Got it. Yeah, Abhishek, I think you have a thought.
Yeah, I think in banking, like it depends. I mean, depends on what your undergrad background was in. If it's something completely, say, mine was electrical engineering, like something like that, like then a master's in finance to prove that you understand finance, like it helps. But like, I mean, as Swaran said, I fully agree with that. It's not between that and MBA and an MBA, it's generally like there seems to be a huge preference for MBAs.
Okay. I think we just have one last, maybe a couple more questions we might be able to squeeze in here. One is again similar to where we had earlier question about transitioning from a different field. So if somebody's working in an asset management firm, tracking asset performances, portfolio optimization, and those kind of things, what kind of opportunities would be the most relevant to transition to within finance? Abhishek, any perspective for a person with that specific background to transition to, let's say, something in IB that would make a lot of sense?
I think the natural fit would be something in global markets. It's one of the trading, structuring, risk management, something along those lines. I think just given that your expertise is in following the markets and you have done that for so long, you would probably have views on the markets as well. So I think the most natural fit would be global markets, I think.
Yeah. And Swaran, do you feel like there is any organic or natural transition potential to a role in VC for a person with asset management background?
So asset management would mean like mostly doing portfolio management or or investing?
Portfolio. Yeah, portfolio management.
I think portfolio management still has a lot of relevance to transition to investing roles because you have done the second part of the VC roles. Because if you divide the VC role, you typically raise funds, look at opportunities to invest, and then finally exit. So if you have done one part of it, which is more portfolio management, then given why you think you would fit into the investing role, I think companies are typically open to consider that. It's not a first choice for them. The first choice is, of course, to hire somebody externally and get them directly a investing role. But I think with asset management, if you have been in the firm long enough, you have been delivering, you have been performing, firms might be open to kind of like consider you for the investing role as well.
Okay, that's helpful. I think we just have time for one more question, and we're certainly starting to see a lot of questions here. But this one is for internal movements within the same company. So if, let's say there is a person who's already working at either an investment, I would say typically it would be more applicable to investment banks, but correct me if I'm wrong, Swaran. I think if you're moving internally from one role to another, would companies allow you to transition countries, right? So like, for example, let's say I'm a banker today in India and I'm looking for a role in London. Would they easily allow you to do that? And would they have any specific requirements from a skill standpoint before they assess your transition?
No, so typically you need to, I mean, so the simple answer is no. I've moved from India to Dubai to India to London to Dubai, back to London. So like it's the answer is no. But I mean, I think typically they have like, you need to have 2 successive cycles of good reviews, which is usually like, you need to have proven yourself within the organization for a minimum of like 18 to 24 months. But once you've done that, I mean, I think it's, and once you have demonstrated that you, especially if the new team that you're going into, you've worked with them before and they have a good impression of you, I think it's quite easy to do.
Okay, very helpful. I think this will definitely be the last one since we just have 2 minutes left, and I think it should be a quick one. We have covered a lot of this already, but it's from somebody who has a BCom degree, so Bachelor's of Commerce, and they're asking which degree in finance or which degree out of CFA and MBA would be more helpful to get into finance field. I think it's a broad question, but Swaran or Abhishek, either of you want to just kind of maybe highlight the difference between a CFA degree and what the end goal for that degree is versus an MBA? Abhishek, you want to take that up? Wait, can you still hear me?
Yeah, I think we lost you for a bit, but I think, yeah, I get the question though. It's CFA versus MBA. I think it really depends on what you are looking to target at the end of it. It's, I mean, it's a very difficult question to answer because I think it comes down to that sort of, do you want to go into VC? Do you want to go into VC? You can answer, yeah, it's a very broad one. I think if you are, for a lot of like people who are completely undecided, like maybe if you're like 21 and you have no idea which direction you want to go in, maybe then MBA makes sense because it gives you those 2 extra years to think. But really, I mean, there is no, I mean, it's more about like what's your, if you have that clarity on what you want to target, which sort of which sector you see yourself in, I think you can work towards that specifically. Like,
so any specific roles, Abhishek, that would give priority to a CFA holder rather than an MBA degree holder? Any specific
equity
roles?
research? Yes. Equity research is like almost in some cases like it's a prerequisite to have a CFA beyond a certain. But like other than that, it's not a prerequisite anywhere. It's a good credential to have, but like it's not a prerequisite.
Okay, I don't know, Swaran, if you have any thoughts on that.
I think similar. Like CFA is still considered that satellite degree or that part-time degree versus an MBA where you spend like 2 years or 1 year depending on the course duration. So in general, I think there is a lot more weightage given to an MBA than a CFA in most roles. So I think I would concur that a lot of it would depend on the eventual goal, role, profession, industry, and so forth. But if you have to pick one without any other details being given, I think I would also pick MBA over CFA.
Okay, perfect. Okay, I think we are coming to a close here. Thank you so much, both of you, for sharing all of your experiences and insights. I think it was tremendously helpful, even for myself, who was not pursuing a career in finance, but you know, it was enlightening. It was really enlightening. So thank you again, and thanks to everybody who could join us today. Take some time out of out on a Friday afternoon from their work or school. And one thing that I just want to share is, in case anyone in the audience is thinking about landing a role in finance and investment banking or venture capital specifically, we have industry experts like Abhishek and Swaran on our platform who can give you very personalized one-on-one guidance and tell you exactly how to bridge any gaps between your current profile and the desired role. So feel free to check out our platform. I'm sharing it here in the chat. It's www.mypivot.work. And with that, I think we'll wrap this one up. Thanks again, both of you, for joining, and I hope you have a great rest of the day.
Yeah, thanks for having us.
Thank you. Thanks all.
Thank you.
Thanks, everyone. Bye.
Cheers. Bye.